Good afternoon, this is Pat Walker, Mission Winners, doing a video overview of the ETFs. Why do we look at the ETFs? It's not because we like to look at a bunch of charts. It's because we like to make money. And how can we do a better job of making money? Being organized, systematized. Here's a fact. Leading groups produce leading stocks, and leading stocks produce leading groups. By looking at the ETFs, we can quickly see where there's strength, potential areas to maybe look into further to buy, but also areas to avoid. You can say, well, what do you mean with the ETFs? You look at the ETF and maybe you see a technology ETF that's acting really good. You can do a Google and find out their top 10 holdings, and you'll probably find some leaders in there to make money. Systematized, that's what we do, and that's what we taught at IBD meetups forever. Here we go. Clean and simple base on the weekly. This is First Trust Dorsey Wright Technology. Trended nicely on the weekly, starting to get a little toppy here on the daily, okay? But the trend is still up. Also note this, and I'll tighten this up just a bit for you. You can see it's falling, but it's doing it on decreasing volume. Support on the 21-day, something to watch. Let's move on. Gold miners. Yeah, it's going up here a little bit, as you can see. A lot of overhead on the weekly. This is a great template, folks. I developed this years ago. Weekly on the left, daily on the right. You can say, well, that don't look too bad. But then you look over here and say, that thing's got a lot of overhead supply. There we go. Let's continue on. So be careful with it. Gold. Gold's a little bit stronger. I'm going to go back here. Here's the gold miners, okay? And it's well off its weekly highs from the end of last year, right? Go to the gold and you go, oh, look at this. This is why we do this. You can say, look at those clean tops across here and look at the volume pickup on that bar and look at the lift on the daily. I'm not saying buy it now, but what I am saying is by doing this tactic every week, you get a great idea of where there's potential opportunity. That's clean and simple base right here, weekly, daily, and it made a good run. I'm not saying buy it now, but I'm just trying to share the tactics. Continue onwards. Biotechnology, stay away. Here's the weekly, here's the daily. Look at this. Look at that drop there on the weekly, on the daily. Be cautious with that. I'll make this a little bit bigger so it's easier to see. Let's move on. Oil and gas is steadily trending up. That's good to see. Now it's a little bit extended, okay? So you've got to be careful with that. But maybe there's some opportunity coming up in oil and gas. You could punch up IEO and find out their top 10 holdings. Continue onwards. Software technology. Look at this. This is sloppy here, folks. Look at the gap down. Look at this tail bar down. Look at that gap down. They're selling it. You can punch up IGV and find out what their top 10 holdings are. And I guarantee you, you'll say, yeah, you know what? It's a good thing we haven't been involved in software technology. There you go. Leave it alone. Medicine, lagging, leave it alone. I mean, there's support on the 50-day, but there was some selling. Just at this point in time, leave it alone. There's nothing special here. Aerospace and defense is chopping around. Maybe it'll bounce here off the 21 EMA, which is the blue line, but it's going to need some volume. There was some serious selling volume right here too. So again, it just says, be a little cautious. That's all. Not being negative, just pointing out. Home construction was acting pretty good here on the weekly and the daily. Here's the weekly, here's the daily, but now it's gotten a little loose. You see the travel range on these bars? Wide and loose bars indicate high investor emotions. High investor emotions and good decision making are mutually exclusive. We like simplicity. It will really help you. Think about this, Bill O'Neill with the cup and handle. It's a simple pattern. For us, clean and simple flat basis. Everybody sees it. It makes it easier. This is a little loose. S&P 500 growth, a little sloppier. Had a good day right here. Excuse me. Had a good day right here. All right, but it's a little loose here, but it's still not bad. S&P 500 growth, something to look into. Continue onwards. Small caps, lagging, be cautious with it. Real estate, a little sloppy here. I'd be cautious with it. Look where it rallied right up to the old highs, and here it is on the weekly. Right up to the old highs and gives it right back. Be cautious. IYT, we've got a bad data point in here, I do believe. We're going to refresh this and see what happens. Bear with me. If we can't get it right, we'll move on. No, we can't here. Anyway, transports, let me refresh this and see. I'll have to go back on the database and correct this. There we go. No, we've got bad bars here. I'll have to look into this, and I apologize, okay? We'll have to see what it's doing. Punch it up on your system and see how it looks, though. If it looks rough, leave it alone. That's simple, okay? That might have been a split. Here we go. Mid-cap. It's trended nicely, but it's getting a little sloppy right here. You can see there's some selling coming into it. Be cautious with mid-cap stocks. Oil services is acting pretty good. And it has acted pretty good with energy. That's why we do this. You look back here and say, gosh, this is kind of grinding up. You could punch up OIH, find out the top 10 holdings. Maybe there's something in there. Now, it's a little bit extended now, so be cautious with that, okay? Pharmaceuticals, it's just basing. It needs to take out that top line. Until it does, nothing to do with it. Also, it fell on fairly heavy volume on Friday, so watch out for that. QLD, the NASDAQ one, I love this ETF. This has been so good to us through the years, okay? We got base right there. Worked here, but now it's getting a little sloppy. Wide and loose action. Be cautious with that, okay? That's a tail bar right there, too, on heavy volume. You see this? It gaps up, it runs up and closes near the lows on a pickup in volume. You got to be cautious with that. Continue onwards. QQQ, same situation. And it fell on Friday on pretty darn heavy volume. And look at the tail bar here on heavy volume. They're selling it up there. At this point in time, it just says, be cautious with NASDAQ 100 stocks. Retailing steadily trending, and that's good. That's something that could have been looked into a while ago. It's still acting good. However, it's extended in price. Be cautious there. Also, the volume's really dropped off here. Be a little cautious with that. This thing trades thin, by the way, too. Contendward, silver. Silver and gold. It's slowly grinding up, and that's nice to see. And it's acted decent back here, too. You can say, well, it's extended. There's nothing to do with it. This is my point. You now know more than you did 10 seconds ago as far as, yeah, I need to look at the ETFs and look for strength. Maybe there's opportunity. There you go. And that's my goal of Mission Winners is to help. Now, what does this tell you? Stay away from steel. You know, oh, maybe this is the bottom. I don't want to play the maybe game. It's down. It's below the moving averages. It's loose. Wide and loose pattern. Leave it alone. Steel stocks. SMH, support here on the 21 EMA, needs to bounce off of that. But it's gotten pretty loose here, so be cautious with that. All right. Spider support on the rising 50-day. And the trend, it's still trending, folks. Okay. It's not over, but we need to see some power off the 50-day, the 21-day exponential. And let's go back here and clarify. This is the 50-day simple. This is the 21-day exponential. And this is the 8-period exponential. Things to take into consideration. Overall, be a little cautious. SSO, same situation. It's still trending, but there's some distribution occurring in there. Just be a little cautious. TAN, solar, what's this telling you? Stay away. Look at, oh, it runs up, drops like a rock. Runs up, drops like a rock. Same thing here, and it's in a downtrend on the weekly. Leave the solar stocks alone. Done. See how easy that is? Small caps, kind of loose here. I'd be cautious with that, okay? Big reversal bar right here on volume. You can see it, kind of loose. I'd be a little cautious with small cap stocks. Oil services doesn't look too bad, okay? But not a really clean entry, but it looks better than a lot of the others. Consumers kind of hanging in, but then it lost the 21-day on a pickup in volume on Friday. Just a little slap here. Here we go. Aerospace and defense, still trending, needs to bounce off the 21-day with volume. Here's a lesson for everybody. Look what it did right here. Look at the selling volume on that bar. That's heavy. Be cautious with that ETF, but also the stocks in that ETF. You can Google XAR and find out what their top 10 holdings are. It'll help you. Biotechnology, there's nothing to do with it. Isn't this great to know? And it told us a while ago, stay away from biotech. Done. Don't have to overthink it. Home builders, still hanging in there, still trending nicely. Here on the weekly and here on the daily. Now, if you've noticed, it was trending nicely, but now you notice it got loose here and it's getting loose again up here. And there was heavy selling on this. Be careful with that, all right? Materials, how do you build houses with materials? And it's still trending nicely. I talk a lot about this, and this is probably the perfect example of why I talk about this. This is the 8-period exponential moving average, all right? And trends pay. Look at the trend on that up the 8 EMA. Look what it does. Comes right down to it and bounces off of it. Comes right down to it and bounces off of it. Gets near it and bounces off of it. There you go. Trends pay. Now, it's extended here. I'm not saying buy it. But the lesson here is ride trends, folks. Let the stock work for you instead of your eyes and fingers. It'll really help you. Nothing to do with it now, but I just want to point that out. Continue onwards. Communications is up there, but kind of choppy up here. And here's a good lesson. Oh, look, it goes up, drops. Oh, look, it's going up, tail bar, reversal bar, tail bar, tail bar. What's that tell us? There's a seller up there, okay? Just be cautious with it. That's simple. It needs real power. It's going to need price and volume power for us to be interested. Energy, it's kind of grinding on up too. Another energy ETF. Look at that. That's good to see. Now, is there any spot here? No, it's too extended, but maybe it'll do this, and I'll draw this for you. Maybe it's going to form a handle up here. And if it does, that might be a buy. Let me go back here. Hold on. I'm sorry. There's XLC chopping. There's XLE we just did. Financials steadily trending. That's good. Got a little sloppier up here, and it's extended. Here's an important lesson. Buy at the right spot, breaking out of a base. Like right in here, going across here, but now it's extended. Don't chase extended stocks. That's an emotional decision, and we don't want to do that, okay? Continue onward. Industrials are still hanging in there. That's nice to see. It's not that bad. Technology. Do a compare and contrast. Oh, this is trending nicely here. Technology. Oh, gosh. Oh, gosh, it gapped up. Oh, it gapped up. Oh, it gapped down. Oh, big reversal bar. This is loose. This is indicative of high investor emotions and lack of conviction, okay? With technology, this is the technology ETF. What's it tell us? Just be a little cautious with technology. I'm not being bearish. I said be a little cautious. I didn't say sell everything, but just be aware of what's going on with the ETFs, the industry groups, and the stocks in those ETFs. That'll help you. Consumer staples, still hanging in nicely. Trending, as you can see, a little bit of selling right here. Notice how it was fairly tight and constructive, and it got loose here. Be cautious with that, okay? XLV, healthcare still hanging in, but it also, look what it's doing. It's dropping on steadily increasing volume. Be careful with that. Consumer discretionary is pretty loose here. I'd watch out for that, okay? Leave it alone. Metals and mining, this is why we do this. In 1 second, it says, I'm staying away from metals and mining. That's it. You don't need to overthink it. Well, maybe it's going to bounce. Why play the maybe game? There's nothing there. It's dropped, and it fell on fairly heavy volume on the weekly. For right now, just leave it alone. Nothing to do with it. No opportunity in that sector. Oil and gas, another oil and gas ETFs, that's acting okay. Hold on a second. My apologies for wiggling. So we'll watch this. But again, another energy ETF that's trending nicely. Maybe look into the energy sector. Retailing's basing, but a little sloppier. Software, this ETF is thin, okay? But it's a pretty good proxy for, hey, what's going on in the software sector. And you can see it. It's look at the whipping around here, folks. Look at the travel range, back and forth. Lack of investor, we're sticking with the stock. It's choppy here. Not a lot of conviction. There's the fancy word, lack of investor conviction at this point in time. Be cautious. There we go, and back out to 50. And jets, right here. You can see the jets. We're back out there. The MAXLIST stocks are the big institutional brand names. It's a list that I put together, major portion of it, years ago. They're the names that funds, institutions have to own at certain times, or their managers will be fired. They're that powerful, okay? And you'll see why. There's a lot of work behind this list, I'll just tell you. So we're taking a look right here, where we frame it up first with the major index ETFs. And you can see right here, this is the spiders on the weekly and the spiders on the daily. I love this template. I encourage you to use it. Why? You look here and you go, well, yeah, there's some distribution there. I can see it. But then you look at the weekly and you can say, yeah, I can see further evidence of that distribution. I'm not saying the market's going to fall. I'm not saying that at all. I'm just saying at the moment, it's pausing a little bit. And just look at the price and volume actions. Look, down on heavy volume, reversed up a little bit, up a bit on less volume than it fell on, quiet inside bar, down on heavier volume, down on heavier volume. A little bit of distribution is occurring at this point in time. How long is it going to last? I don't know. Nobody knows the future, but we do know this. At this point in time, there's a little bit of distribution on the daily and the weekly. And it just says to us, hey, be cautious. And I love that tactic. Let's move on here. Here we go. SSO, similar situation, as you can see. I lean on the QQQ and SPY more than the leveraged ETFs for making decisions on what's going on in the markets. Continue onward. There's QQQ, and you can see on the daily, look at that reversal bar there on heavy volume, folks. It was talking. There's another great tactic that we teach admission winners, and it's simple. Just look at the price and volume bars and say, are there more red bars than green bars or more green bars than red bars? It's not that difficult. And you can say, recently there's been some more red bars than green bars. Okay. Now, that doesn't mean, we cash in all our chips and we're done. It just tells us to be cautious and don't keep buying and being overly aggressive. Will it turn? Of course it will. When? It'll tell us. Down on fairly heavy volume on Friday. Let's continue onwards. There's QLD. Same situation, but you can see this is more relevant in our decision-making process, QQQ, than QLD. There you go. Let's move on. There's IWM. Small caps, reverse down on heavy volume. Just tells you to be a little cautious. At the same time, MDY is down, and this is a good lesson. IWM has taken out the lows right here, the 21 EMA. That's the blue line. MDY has not. Which one's stronger? Mid cap is stronger than small cap. That's good to know too, and it's not fancy. Now, I'm not saying buy it, and here's why. Because just recently it's falling on a slight pickup in volume. Maybe it's going to stop. It'll tell us what to do. Anyway, there's some good explanations for it. There's TNA, the leveraged one. You can see what that's doing. I'll just share this with you, and this is important. Before you master, I'll flip this into a positive. Master the non-leveraged ETFs. Chart reading, price and volume action analysis, before you start getting into the leveraged one. Because the gains can be magnified, but so can the losses. Let's continue onwards. So here we go. Here's Apple. Weekly on the left, daily on the right. And what do you see? This is a great tactic. I taught this at the meetups, IBD meetups for years. You want to know what the trend of the market is? I read this somewhere and I forget where. Take a picture of the chart, tape it to the wall, go to the other side of your room, office, whatever, and look at it. It'll tell you the trend. What's the trend? The trend is down. That's all. Could it change? Of course. Will it change? Sure. Sometime. When? We don't know. But at the moment the trend is down, we don't argue with it. That's simple. Oh, one plus here, I have to share this with you, is this could be forming a higher low. But this is Apple. There's a ton of distribution. Be careful with it. Let's move on. Okay. Amazon. Amazon's still trending. Do a compare and contrast. Look at Apple. Below the falling 50 day. It's below all the moving averages, right? The 50-day, the 21 EMA, and the 8 EMA. Let's go back to Amazon. Well, it's a little bit below the 8, but it's still above the 21, the rising 21 and the rising 50-day. Amazon is stronger than Apple. There you go. Now, you can see this base right here on Amazon, but it did fall on fairly heavy volume, and I'll draw this for you to help you. I love teaching this. I love helping, just speeding up the curve. Just coming through here, and what's it need to do? It needs to push through here, these tops, and it needs to do it on really heavy volume. Also, please note, on Friday, it fell on fairly heavy volume. Still above the rising 21-day, but it did fall on fairly heavy volume. Look at the volume on that bar versus all of these. It's the heaviest volume bar since February 2nd, month and a half, basically a month and a half. So just says be a little cautious on Amazon. Continue onwards. Alibaba, there's nothing here. This is a great, as far as potential, but I will share something that's very powerful. These are called tail bars. That's what I call them. It runs up and just a tail sticking out there. There's another tail sticking out there. There's another one. What does that tell us? There's a tail bar right here. It tells us, hey, there's a seller up there that wants out bad. So bad that it's dropping hard on a gap down, it's dropping hard on a gap down. And it just, in a big drop down here. It just says at this point in time, stay away from Alibaba. Done. You don't need to overthink it. We don't need to overanalyze it. We don't need to say, oh, this is where it's going to bounce. No, it'll tell us what to do. I taught this at the meetups, and I'll share this with you. When we accept the fact that we don't know the future, we see the future more clearly. That's not a cute, funny quote. That's a fact. Ponder that a bit. When we accept the fact we don't know the future, we see the future more clearly. We accept it for what it is. Don't impose your will on it. BIDU, tail bar, stay away. It's below the moving averages on the weekly and on the daily. Just leave it alone. Done. Google. Google looks like it's starting to bottom here a little bit. We haven't been in this in a while, okay? We haven't been in it this year. Why? Well, look, well, there's a little run here, but overall, it's been pretty dang choppy. And it just tells you to be careful, all right? Also, you see that gap down on heavy volume? Folks, gap downs tell us that people want out of it so bad, they're just going to sell it. They gapped it down here, they gapped it down here, they gapped it down here, they gapped it down here. We just have to wait. Now, it may be forming a base, and if it does, we'll be ready. But at this point in time, not a lot to do with it. And don't overthink it. Goldman Sachs, this is another good lesson. Do you see how loose these bars are? It's whipping all over the place, okay? It's like the scrambler at the carnival. Remember that ride? Or the octopus, whipping you around. There's really nothing to do with it. And also note, look at the range of these bars. These are called wide and loose bars. Look at the travel range on these bars. It's really loose. High, what does that indicate? High investor emotions. High investor emotions and good decision making are mutually exclusive. There's nothing to do with it at this point in time. Eventually there will be, but not right now. Move on. Intel, there's nothing there. Look, it's below the moving averages. Just leave it alone. It's like, oh, maybe it's going to do this. No, why? Why not go where there's strength? There's no strength, and it gapped down hard here. And look, tail bar here and here and here. Tail bar just sticking out there. Here, tail bar. Be careful. Move on. MasterCard started to lift off on Thursday and then gave it right back on Friday. And note, it fell on heavier volume than it went up on. Tells you just be a little bit careful. Now, could this start to lift off? It's one of the few MAXLIST stocks that's exhibiting some strength. But it's going to need what? The market. The M and mission winners, the market. Meta it's been a great run for us. I mean, look at the weekly. The buys back here, buys in here. That is, especially, look, buys here, buys here. You need to buy for 350, 350 up to 500. There it is, just trending nicely. We've sold some into strength. We're letting it work. Support on the 21-day. Now, here's another lesson for everybody. And again, these are what we teach at Mission Winners. And it's not fancy. You go, oh, it fell on fairly heavy volume here. It recovered, but it recovered on less volume than it fell on. Oh, look, it fell on a pretty big pickup in volume on Friday. It lost the 21-day by just a little bit, but closed above it. Got to be careful. I hope that doesn't lose the 21-day. There you go. Now we have a plan. Let's suppose it does. I'm not saying it's going to, but we always have a plan. Let's suppose it does. What do? We'll sell some more shares and lock in more profits. It's been a monster run here, though. For that, I'm grateful. Let's continue onwards. Here we go. Microsoft started to lift off on Thursday on good volume. Look at that. It was lifting. That's a good base. It's a MAXLIST stock. But then what's it do? It gives it back on fairly heavy volume on Friday. And we bought this. We didn't buy it up here. We were buying down here. Okay. Starts to drop. What do? We sold it for a very small loss. I will tell you this, team. We don't have 7 and 8% losses. This is why I love clean and simple bases. Like this. I'll just draw this for you. Price is good above the line and bad below. That's it. Just daily charts. Don't need to look at the 5 or the 10. There's too much emotion there. There we go. Nothing to do with it at this point in time, so we'll have to watch and wait and see. Netflix is still in it from lower, okay? And we sold some up here on this reversal bar. Now we'll watch it and just see what happens. But it had a nice trend, folks. A really nice trend. There we go. So that's where that's at now. Nothing to do with it now. Just be cautious. Let's move on to NVIDIA. NVIDIA, you see this base on the weekly? I made videos on this. You can go back and look. Go back and look and you'll see. My God, he did. Way back here, before it broke out, I was making videos saying, that's a pretty good base. Maybe it'll push through there. By the way, this is a great lesson. You can say, oh, that's a red volume bar, Pat. Look. But note where it closed. It closed in the top fourth of its range on the weekly. They supported it. You say, well, gosh, I guess if it takes out those clean and simple tops with volume, that'd be pretty good. Oh, gee whiz. And this is what we taught at Mission Winners forever. This is what I taught at IBD meetups forever. Price is good above the line and bad below. People talk with their mouths. This is the key. People talk with their mouths and vote with their pocketbooks. On that weekly, they voted. And we did too. And we bought and bought. Wrote it and basically 500. We'll call it 510. 510 up to a 960, 970. How's that? There it is. Now, let's take a look at it today. What's it doing now? Well, it's just, let's get to the right chart. That way I was sitting there saying, that's not right. Well, we lost it. There we go. My apologies. There we go. It's basing right here. It's resting on the ADMA, but as I stated, there's some distribution in here. You can see it. Look at the red bars. Perhaps I already have the price alert set. You see it? Also, this is a great lesson for everybody. Notice where the price alert is set. I'm not so much concerned about the lower alert. We're in it with great cushion and we've locked some in. We'll watch this, but I will do this for you. Watch that. I raised my lower alert. Also, this is a great lesson for everybody. Don't set your price alert at the low of the bar. Set it a little bit early so that if it triggers, you can watch it and see if it keeps falling. Also, don't set your upper alert at the high of the bar. Set it a little bit early. Why? If it triggers, you can watch it and see, oh yeah, it's going up. Oh man, it's hitting the highs of the previous bar. There's some volume coming into this. I gotta watch this. There you go. There you go. So this is a pullback on lower volume, resting on the ADMA. See, I already have the price alert set. If this starts to lift off of here, that may be a buy. I'll shrink that just a bit so we can look at the other ones. Continue onward. Tesla, there's nothing to do with it. There hasn't been anything to do with it for a long time. Have we been involved with it? Nope, no need to. That's it. Just leave it alone. Visa started to lift off, but here's an important lesson for everybody too. And again, this is what we teach. And I love teaching this. See the clean tops right here? And I'll draw this to help you. I don't want any stone unturned. There's the base, okay? But note what it did here. It gapped up. Look where it opened. See the little hash mark to the left right there? It opened near the highs for the day. A big gap up. Big gap up. And we know the market's been sloppy recently. That's why we've been careful buying. And you should be too. Gaps up, and then they take it right back down. That's why we don't buy big gap ups. Right there at the open. No, that would hurt. That would hurt. So not in it. There we go. And then we go back to the top. Anyway, that is a video overview of the MAXLIST, the major index ETFs, which we always frame up things first, and then the MAXLIST, looking for opportunities.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.